It's time for the Brian Beatty Real Estate Show.
Good morning, Charleston, and welcome to another edition of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. I'm, of course, your host, Brian Beatty. Thanks for joining me this morning. If this is your first time tuning into this program, this is where I get to share my experiences as somebody that's been selling real estate here locally for 20 years, about 1,500 properties sold, about $1 billion in real estate total sold. So I help you guys understand what's happening in the real estate market. I also share my experiences so that you understand the process of buying, selling, or investing in real estate, right? So that you're an informed consumer. Today is, in my opinion, probably one of the most impactful shows we have ever had in the history of this show in the 13 years I've been doing this. I have right across from me my best friend from college, Michael Honeycutt, who is going to help us understand in layman's terms, right? He could really nerd out on this if he wanted to. But what we're going to talk about is the impact of tariffs on housing. And we're going to go a lot deeper than that. But that's the plan for today's show, is to help you guys understand and really take into account not just what's happening nationally, but how does that impact us here in Charleston, South Carolina? So without further ado, Michael Honeycutt, welcome to the Brian Beatty Real Estate Show.
Thanks for having me, Brian. Glad to be here.
So first of all, let's just tell folks kind of what you do.
Sure. I've been in finance since we graduated from College of Charleston in 2006. Specifically right now, I'm a director of finance at E78 Partners, which is a private equity consulting company that supports private equity firms as they look to grow and scale a lot of their businesses and look to add through acquisitions or driving organic growth, and we're there to support them as they develop those plans. And when they run into problems and challenges, we provide solutions to them to help them scale their platforms.
Fantastic. So we're going to talk about tariffs and the impact on housing today. Yeah. We could fill an entire show with, college stories and the 2 beautiful summers we spent in Tulsa, Oklahoma, your hometown.
A lovely place.
Merging medical records, or, if you can believe it, and I think it's fair to say that you were probably, one of, if not the top economics student at the College of Charleston. I was probably one of, if not the top business student at the College of Charleston. Yeah. Yet here we are working in a steel mill in Oklahoma, making good money, but really helped us value the education, right?
Working the midnight shift will change your opinion on graduating from college.
Absolutely. All right, so let's talk about, I want to kind of cover first what a lot of people I think are thinking or feeling or maybe reading, right? Mm-hmm. And that is, at least in the short term, how do tariffs impact things like construction materials and building costs for housing?
All right. Yeah, so one of the things you really got to think about is those short-term impacts and how that's going to affect the prices for those raw materials, which is going to then be embedded in the cost of any new homes that are going to come online. As builders are seeing higher input costs come for constructing a new home, from lumber to drywall to windows and roofing materials, and all those pieces make those homes incrementally more expensive, they're going to, in order to preserve margin for themselves and profit, have to pass a lot of those costs on to consumers. Obviously, things like land aren't going to change too much from tariff prices, but those immediate effects, they will have to realize it. And what you'll start to see in the near term is less available supply coming online to augment or enhance the growth of regions like Charleston, where people are moving in. You're needing new housing supply come online to be able to kind of buoy and support existing home sales to preserve that market equilibrium.
Right. So how do you think, because this is the question that a lot of people are going to ask, right? How do you think tariffs will impact things like inventory and affordability?
There's a couple of things that are going to go that'll impact that. And it's in the short run, the answer is to be determined. In the long run, it's really predicated on how long and how persistent are these tariffs going to be. In the short run, I think consumer sentiment will drive a lot of the behavior that you're seeing. Like, there will be, how do people feel about today, next month, next year? And those are two things. It's like, am I secure in my job? How strong is my consumer balance sheet to be able to either buy a new home or even support my existing home, to be able to offload that and maybe downsize or relocate, or even people are looking to relocate to Charleston. How do they feel about being able to come here and be able to get the home that meets the quality of life standards that they're looking for?
Right. And I think that a lot of people that are maybe absorbing material or content elsewhere, I guess they need to be a little careful in what they're reading and the authority and the experience of the author putting that information together for people to consume. I think that one thing people are led to believe as a result of these tariffs is that, we've already seen a lot of volatility in the stock market. People are going to pull out of that. They're going to become cash heavy, or they're going to transition their assets into something maybe safer like real estate, or put it into something like, treasury bills, right? Which the yield on treasury bills very closely mirrors the interest rate on the 30-year mortgage.
Sure.
So I think the question that a lot of people have is, how do we think tariffs will impact something like a mortgage rate?
Sure. There's two pieces that'll work against each other depending on how these tariffs come together. And it's going to be based on what is expected inflation that's coming from the impact of those tariffs. If we're seeing higher input costs and you're starting to see consumer prices like in food and staples that people can't pare back purchases on, coupled with the impact on the employment market, because really the Federal Reserve, if you want to talk about what drives mortgage rates, it's going to be, is the Fed going to cut rates or are they going to raise rates? They would cut rates if we're seeing employment drop, and they would raise rates if we're seeing inflation increase. So these two could work against each other, and they could be kind of stuck in paralysis, kind of just stuck in the mud, and not be able to really have a clear direction on how do we impact policy. Now, if we're seeing high inflation and stable employment, we're good. You'll see rates actually go up, which may not be what people want as homeowners, but it may be what's needed to kind of offset the cost of those tariffs to bring that inflation down. Now, if we're seeing inflation be steady but employment drop, then you'll see those rate cuts, and you would likely see the policy response to be to bring mortgage rates down, which would then obviously give more dollars for people to be able to go and bid up the price of homes.
Right.
So they would tend to work, it would kind of, in the long run, even out.
Well, and then, even before tariffs were announced, even before Trump took office, people have been hanging on to what the Federal Reserve is going to do and what their policies are going to be as, in terms of keeping them the same, dropping rates down. I think we were all hoping that by maybe this time this year, we were going to be in like the 5% range.
Yep.
Obviously, you have a bunch of folks out there that are like, I'm not buying a house until I see 3% interest rates again.
Yeah.
I don't think we're going to see that unless we have some sort of catastrophic economic event, right?
And that'd be a whole nother set of problems.
Yeah,
as soon as you do that.
Yeah, so it sounds to me like, at least in the short term, interest rates are probably here to stay. They're probably going to remain around that 7% number, give or take a few, maybe half a point in one direction or the other. But I guess, let me ask you this, because I want you to kind of drive the ship here a little bit.
Sure.
What do you think people really need to understand or know about tariffs, and not just the impact on housing, right? Because housing is a lagging indicator of the economy.
Sure.
People respond to what's happening in the market, and then they decide whether or not to buy or sell a house. Although real estate, to be fair, accounts for like 16 to 18% of GDP. So what is it you think people need to know about tariffs and its impact on not just housing, but really the economy in general?
There's been a couple of schools of thought around this. Historically, in the econ classes that we took at College of Charleston, there was the people that would say free trade removes barriers. It allows for the free flow of money, goods, and services across international borders. And it enables companies, individuals, and countries to specialize in things where they have an advantage. Right. You wouldn't want oranges being grown in Minnesota is a good example. You get your oranges from Florida and you get your wheat from Minnesota, and they trade with each other. And obviously we're inside the United States, so that's less of an issue because it's not like they're putting trade barriers up against each other. Coffee in raw materials, lithium, which comes from like the Congo, those are going to come from areas where we sometimes have to set up trade agreements. And as soon as you put up trade barriers and you see those input costs rise, the option is a business either passes that cost on to the consumer, or they see eroded profit margins because they know that the consumer is not going to be willing to take on that, and they'll actually see eroding market share as they try to pass those costs on. So they tend to really impact each other adversely. The more you throw up that barrier, the less of that good you're going to get because it becomes more expensive.
Perfect.
So, I really think in a perfect world, we would eliminate trade barriers. But I think there's a broader sentiment in the world today that other parties, the United States is trying to be a partner of free trade through things like NAFTA and through the World Trade Organizations. But they're not seeing reciprocal tariffs, right? They're not seeing that same reciprocity from other countries that we trade with, that we have trade deficits with, that are not buying American goods. And to be fair, America doesn't manufacture a lot of low-value goods. It tends to be high-skilled, high-cost goods that we specialize in. That's where our specialization's in. But tariffs are ultimately a barrier to trade with other countries. The question is, can you bring that back onshore to the United States without those goods being incrementally more expensive to the American consumer?
Absolutely. So what I want to do, Mike, is I want to take a quick break.
Sure.
When we come back, though, I really want to kind of hone in on what you think is going to happen in Charleston, right? What's the impact here? Because we have a lot of, like things like the port, as an example, right? So I want to talk more about that, but we are going to take a break. And just really quickly, for those of you that are, listening in, that might have some additional questions. Obviously, Mike's the expert here, but what you can do is you can call, text 843-800-0065. That's my direct number. You'll talk straight to me, 843-800-0065. Or you can contact us through our website, listingsincharleston.com. But, a lot of folks listening are going to be asking themselves, well, how does this impact me? How does this impact my plan, my decision to buy, sell, invest, and when's the right time? All of those are going to be circumstantial and, frankly, just require a conversation to figure out what you're looking for and what we can ultimately accomplish. So, again, 843-800-0065 is the number to reach me directly or check us out online, listingsincharleston.com. I'm in the studio with my best friend from college, Michael Honeycutt, talking about the impact of tariffs, not just on housing, but really on the economy in general. Things you guys need to know, questions that you're certainly asking yourself. And quite honestly, there's not a lot of content out there that revolves around how this is going to impact the everyday consumer from a housing perspective. And I haven't found anything out there that impacts us here locally. Mm-hmm. So that's really where I want to go with this next segment, Michael, is how do you think tariffs will impact us locally? The Charleston market.
Yeah, there's two big things that's going to drive this. Charleston's position as a major port on the East Coast will be directly impacted by the impact by these tariffs, increasing goods, seeing less demand for those goods that are coming from international markets. I think where directly, obviously, places like China will be the ones that will be most realized most quickly. I'm not up on the port tonnage coming from China, but there are a lot of heavy manufacturers here in Charleston as well. We have auto manufacturers like Volvo, Mercedes, a couple others like that may actually see this as an advantage where they can look to expand production here in Charleston, which will affect employment, which will ultimately create more demand for jobs. And you could see some benefits that offset potentially reductions in the port in the near term. So, really, we could be very well positioned given the desirability of people wanting to come to the Charleston market just for the quality of life, but also just our position in the heavy manufacturing. And obviously there's a substantial amount of defense spending that occurs here in Charleston too that will not necessarily feel the brunt of those tariffs because employment should be fairly steady there as well. So those are two kind of the big things. But ultimately, it really gets back to how does the consumer feel about today compared to where they were 2 years ago, compared to where they think they're going to be 2 years from now. And I think that's going to be really the big determinant in what drives the market in Charleston as a whole. I think certain submarkets will tend to be healthier than others. It's just a question of, are people that are relocating here from the Northeast able to sell their home in the Northeast to be able to come live their dream in the Low Country?
Yeah, good point. I want to talk for a second about folks that might be on fixed income. We have a lot of listeners of the show. A lot of folks that end up calling and working with us are, they're a little up there in age. They've been through this process multiple times, bought and sold a home. Maybe they're in their forever home now, and at some point they're going to think to downsize. But for a lot of them, they're on retirement income. So let's talk for just a moment about not just the impact on like everyday consumer goods, but the things that they've budgeted for at the point in time that they bought their house, like taxes and insurance. We've seen a huge increase in insurance here locally over the past few years. I mean, my property downtown went from like $4,000 a year in insurance to like 14 in just a few years. And so how do you think tariffs will impact things like insurance or taxes or just the fixed expenses that people budgeted for at the point in time they bought their house?
Yeah, so when you bought your house 10 years ago, it was probably half as expensive as it is now. And in order for you to be able to match the insurance for a house that's now twice as expensive, you're going to see your insurance costs go up. And in order to, when you have inflation potentially impacted in raw materials and things that you would need in the event that you have to, file a claim and replace the exact same home, it's going to cost you more. So, your dollar is not going as far. And you talk about people that are on fixed income. Inflation is one of the most pernicious effects on fixed income people because they aren't able to kind of capture the upside from that inflation because those dollars are fixed. And they set that plan in motion 30 years ago when they were thinking about how they wanted to retire, how they were going to retire, what's the money they need. And now that capital base is baked and they got to make it last as long as they can. And you're not going to risk on and go at 70 years old and go into equities to be able to try to capture the upside. Because if the market crashes 40% in a given year, you got to try to recover all of that in your 70s, and you aren't able to actually create, feed your near-term liquidity needs that you would get when you're realizing like bond income.
We saw a lot of that in 2008, right? People got massively hammered by the drop in the stock market. Their savings they evaporated, right, in a very short period of time. So did their equity. I think the question that a lot of people have is, are we staring down the barrel of 2008 again?
It's very unlikely that we would be going back to that type of a market. 2008 was kind of a generational black swan moment where you had the combinations of very loose credit, I would say unsolid fundamentals that didn't align the home buyer with the homes that they were buying. They were really stretched. They were their balance sheet wasn't strong. Their income wasn't able to truly support what they were purchasing. And you're seeing a lot more sound. Yes, home prices are high, but incomes are at least better aligned to be able to sustain the financing that they've taken out to be able to meet those home needs. And in 2008, when people started losing their jobs, they're putting them out on the market without enough buyers. There are too many homes going to too few buyers, which is why you saw the price corrections that we saw, that 30-40% drop in home prices. You're not going to see something like that this year unless you saw a massive drop in employment across the entire country.
Right.
And then that's when we start talking about the policy response of employment, lowering interest rates to bring down borrowing costs so that you can stimulate demand, so that you start to activate those animal spirits that'll get people back in the market, hopefully willing to buy those properties that would be put on the market.
Right. And, you mentioned things like consumer sentiment. I mean, I mentioned last show that there's a report that comes out every month on consumer sentiment, right? And it obviously was lower than the month before, kind of to be expected. I also talked a little bit about the market and how we are seeing an increase in inventory. Things are taking longer to sell. You're not getting as much for your home based off of your original listing price, which is kind of a skewed stat anyways, because people can ask whatever they want for their house, right? It's just that the ones that are selling are the ones that are priced really closely to what they're worth, because most buyers really aren't incentivized to, I guess, make an offer on an overpriced house right now. Too many new homes are coming on the market, and they're getting more choices, which is what's creating a little bit more gumption among buyers to do things like offer you less. Because if you don't take it, then maybe the home down the street will. They're starting to pin sellers against each other. I guess final thoughts from you, Mike, on what you think folks need to know, I guess, as it relates to real estate.
Yeah, I mean, scarcity drives value, right? If there are too few buyers chasing too many homes, or if there are too many buyers chasing too few homes, you're going to see either prices drop or prices increase. When markets are more appropriately matched, the number of buyers and the number of sellers are in balance, you're going to see a stable market and a healthy market. People forget how expensive homes jumped in the last 5 years, and they're anchored on the prices of today. Similar to what's happening in the stock market, where we've seen this 10, 15% correction over the last couple months. But those are from a high watermark of December of 2024, where if you look back a year ago, we're at similar prices now in the broader market in terms of your index to where you were a year ago. Are you fundamentally worse today than you were a year ago? There's something to be said that you aren't. Now, if it drops another 15, 20% from there, that's really where, but the panic is against a high watermark that recently occurred. That's newfound wealth that wasn't really built around anything other than sentiment. And seeing the election, that pop that came from there, and it's a tide receding from my perspective. The question is how do the underlying fundamentals of the economy and tariffs intersect with each other to drive costs, drive inflation, impact employment?
It's been awesome having you on the show, Michael. Thank you so much for joining me this morning.
Yeah, thanks, Brian. Glad to be here.
All right, so if you guys have any questions about the market in general, how this impacts your specific situation, your scenario, your plan to buy, sell, or invest in real estate, I will say really quickly, though, that we're already starting to see the market respond with sellers that are saying, hey, I see the writing on the wall. I'm going to go ahead and sell now and capture as much equity as I can, take advantage of the uncertainty in the market, try and get a good deal on something that I'm buying. So if you're kind of in that camp, feel free to give us a call or text us 843-800-0065, 843-800-0065, or check us out online at listingsincharleston.com. That's listingsincharleston.com. And don't forget, we put all this to video. So if you're listening and you want to rewatch this content, check it out on YouTube. They're on our socials, Instagram, Facebook, TikTok, all that great stuff. But Michael, great having you on the program. Hopefully we can have you on again here sometime soon.
Thanks, Brian.
Welcome back, folks, as the Brian Beatty Real Estate Show continues here on the Big Talker, 1250 WTMA and WTMA.com. Huge thank you to Michael Honeycutt for coming on the program. And, it takes a lot of guts to be in a platform like this and share an opinion, because no one has a crystal ball, right? But I think he gave some fantastic information that at the end of the day revolves around you and me and us here in Charleston, South Carolina, right? This is local and local first radio. So we're helping bring together what's happening nationally, regionally, and then reducing it down to how does that impact our market? What about us, right? So that's the goal of the show. Thanks again for listening. I always like to take a moment and just say thank you to those of you that tune into this program and rely on the information within it. It's fantastic. So thank you for that. All right, I want to talk about some additional changes that will likely be experienced here in the coming months as a new, I guess, change has been approved by the National Association of Realtors. It's, this is ultimately, I think, going to impact buyers and sellers, and it will have an impact on the market. But let me kind of explain how all of this works, and hopefully you guys don't go to sleep during this, but this is how the markets change over time. And again, just really quickly, you guys want to reach out to me. You've got questions about the market. You're thinking of hiring an agent. You need your property managed professionally by a property management company. Maybe you want to invest in some real estate. Maybe you need short-term financing. Who knows? We're happy to help you with all of those things. We're a turnkey residential real estate operation. So really anything you need to do with a home or land, we can help you with. We refer commercial deals. So 843-800-0065. That's my contact info, 843-800-0065 or listingsincharleston.com. All right, so last year in August, we had a lot of changes that were implemented as a result of a lawsuit settlement against real estate agents for unclear, unfair practices, mostly revolving around compensation. So one of those changes was that anytime, moving forward, anytime anybody wants to see a home for sale, they have to have a written agreement for representation with a real estate agent before they can view that property, if they want the help of a real estate agent. You are not required, of course, to hire a real estate agent. The listing agent can show you the property if they like. But again, there should be an agreement for representation for an agent to show you a property. It should very clearly outline what their roles and responsibilities are and what yours are and who pays who, how much, when. And it's very clear what would happen if the buyer that sees the property likes it, wants to make an offer and buy the house, right? There's a lot that goes into that process. So we've already experienced some changes in our market as a result of those changes that took place, right? And it wasn't just that. We had things like, the commission percentage removed from the MLS so that real estate agents couldn't basically sort a list of properties based on how much money they could potentially make. Now we have to call each listing agent individually and get agreements signed with those listing agents before we even show the property to protect the commission so that we don't have to go to the buyer and say, yeah, I know you love the house, but look, the seller's not paying me any commission. Sorry, I should have figured that out beforehand, but what do you want to do? You want to miss out on the house or do you want to pay me a 3% commission? That's why everybody got sued, because they weren't doing it right. That's not been a problem for us. Frankly, when all these new rules were instituted, it was like business as usual for us because we're very clear about the process with folks. I hate when people feel like they've had the wool pulled over their eyes. I know I hate it when it happens to me. So we had those changes that took effect August of last year. A few years before that, we had something called the Clear Cooperation Policy come out. Basically, what was happening is a lot of these real estate agents wanted something to market, right? Any agent that gets a listing now has business they can promote to create more business opportunity for themselves, right? That's why you have to be careful with some agents, because you need to ask the question of, well, who's this really benefiting? Is my house actually going to sell? And are you going to do all the things you say you're going to do? Is there accountability attached to this nice presentation you're giving me? Or are you really just hoping to get my listing so that you have something to promote to find another buyer that might want to buy something else, or maybe find another seller? I mean, the reality is that happens a lot. And so several years ago, what would happen is agents would basically get an agreement signed with the seller. The seller wasn't really that serious in selling, but the agent would say, well, let me just kind of market it behind the scenes and see if I can find somebody interested. We won't show your home unless we can really, kind of prove to you that they're ready, willing, and able to buy it, right? We don't want a bunch of looky-loos coming through the house. So what people would do is they would just list it as a coming soon listing, and it would just stay a coming soon listing for months and months and months and years at times. So you'd get all these buyers that would contact these agents, and the seller at this point is like, oh, I forgot I even signed that. Yeah, I don't really want to sell my house. I didn't realize you were going to market it that way. But anyway, so we switched to this thing called the Clear Cooperation Policy. It basically says, hey, any marketing event that I do, even something as simple as putting a sign in the front yard, requires me to then put the property in the MLS within 24 hours from that marketing event, so that I am providing everybody with a level playing field, quote unquote, right? So basically it just says like, hey, you can't do any form of pre-marketing to the general public without putting it in the MLS and giving everybody a fair opportunity to view this property, show it, and potentially sell it or buy it, right? Which a lot of people didn't like. I didn't like. We found a great way around it. And frankly, we have a database of like 30,000 people that we consistently communicate with, so that anytime we talk with a seller and we're about to put their home on the market, we get to sift through our database and technology is so awesome these days that with a few clicks of a button and some parameters that I put in, I basically have AI do a reverse search in my database, and it pulls up all of the buyers that have been looking in that area, in that price range for a home with those features in which your home would fit those buyers' search criteria. So then, boom, we just call this long list of buyers, which is usually hundreds. And not obviously not all 100 of them or 100 plus are looking to buy right immediately, but we usually find a good number of buyers for our properties before they even hit the market. So that's one benefit of the clear cooperation policy. But now they've instituted a new law that says that they have a multiple listing option for sellers policy, which is essentially going to create a new category of listings in the MLS. It has to be implemented by September. Basically, what happens is when you put a property up for sale in the MLS, it then syndicates or broadcasts to a bunch of different websites, right? Like every single real estate company's website, every single individual real estate agent's website, all of these portal-based websites, which is like Zillow, Realtor.com, Homes.com, Redfin, you name it, right? Thousands and thousands and thousands of websites all get broadcast from the MLS. The MLS is the center of the wheel, right? It's the place where all of the information gets disseminated from. So basically what has happened is these folks have created a new category that says, hey, you can basically list your property for sale in the MLS, but delay having this information get broadcast to, every website known to man, basically, right? It's called delayed syndicated marketing. So the seller and the listing agent can market the home as though it's a typical listing. It's shared on the MLS, not on other websites, right? So like, why would a seller do this, right? Well, maybe they want a little privacy attached with the sale of their property, and they don't want everybody to know that it's for sale. They only want serious folks looking. This could be an opportunity for that. Maybe they don't want a bunch of, looky-loos walking through their house. They only want people that have already hired a real estate agent and that are, again, serious about the process. This would be an option for those types of folks. It could also be the person that, they don't really need to sell it, so they don't want to go online and start having a bunch of folks judge them for how long it's taking them to sell their house, right? It's not like they're super motivated to sell. They don't need to sell, and they're not going to price their home below what they want to try and sell it for just for the sake of selling it in a week, right? So you're going to have a lot of folks, I think, that take agents up on this kind of listing, which means that if you're a buyer, you're not going to be able to see these listings online. So if you're searching on your own, they won't be there. You won't see them. The only way those listings can be accessed is through a real estate agent. So not only do you not have to go through them to even see the house and have a written agreement for representation, but now you don't even get to see everything that's available out there. I feel like we as real estate agents gave away the keys, right, to the castle a long time ago when we started sharing the MLS data online. It's been a fantastic, evolution of searching for a new home. But I think you're starting to see the realtor population take back a little control over the flow of information. There's a lot more that I can get into with that. But I think if you're thinking about buying a house, you need to work with a real estate agent that has access to everything that's out there and that has a plan in place to find you properties that don't exist on the market for sale, regardless of whether they're in the MLS or not. I'm talking about off-market properties. I'm talking about ways of finding you deals that no one else knows about because they're not publicly available. So if you want more information on something like that, would love to get some information over to you. I think this market is an interesting market right now. You've got some folks that are a bit doom and gloom. You have others, of course, that are optimistic. I personally am somewhere right in the middle. I can see this going one of two directions. But in the interim, right, in this small little chaotic moment, there's opportunity for both buyers and sellers. I think you just really need a good strategist, somebody with a lot of experience. I'd love to be that person for you. So give me a call, 843-800-0065, 843-800-0065. Check us out online, listingsincharleston.com. That's listingsincharleston.com. Get my free guide, the most comprehensive home seller guide in Charleston, by just texting the word guide to 843-800-0065. Again, text the word guide, 843-800-0065, and I'll send you the most comprehensive home seller report in Charleston. I thought I'd finish off the show with just helping you guys understand what we're doing to try and help some folks in this market, because at the end of the day, the market is changing, but it's not, I don't want to sound like Chicken Little, right? The sky's not falling. Amongst everything that's been happening right now, while new listings have been coming on the market and saturation has increased, and it's taking a little longer to sell, and you're not getting quite as much as you used to from your original asking price, the prices have still gone up. You know, as of last month, when you compare it to the to May before that, I mean, prices are up 8%. The challenge is it's not like every home has seen an 8% increase in the value of their property in the course of the past 12 months. That's why all of this real estate is hyper local, and that's also why we think it's important to give people as many options as possible when it comes to selling a house or buying a house. So I thought I'd just share a few of those really quickly, if I may. These are things that you guys might want to think about when interviewing a real estate agent, right? Is what are you going to put your money where your mouth is, right? Are you going to guarantee certain things? Are you going to give me the ability to fire you if you don't do what you say you're going to do? I mean, that's really, I wish more people had the ability to, as you know, as easy as it sounds, get out of an agreement with the real estate agent. Now, I will also say that this isn't always the real estate agent's fault. You know, there are plenty of folks that I've worked with over the course of the past 20 years that just didn't listen to anything I was telling them. I'd advise them. I'd tell them why it made sense. I'd provide them with a logical solution to their, emotionally driven issue, and just can't get them to budge. You know, there's only so much that real estate agents can do. It takes action on behalf of the seller, or at least an agreement on behalf of the seller. So I don't want to completely throw agents under the bus here. But I think one of the main things about working with our team that people appreciate is that our ability to say, you know, hey, if at any point in time you're unsatisfied with our level of service, if you think we're not doing the job that we have told you we're going to do for you, then you can cancel your agreement with us, right? You have the right to fire us. So that just helps us understand that, look, every day we have to continue to earn this business because we have the right to be fired at any time. That's what holds us accountable. And ultimately, you want to work with a real estate agent that you trust, right? You want to trust their opinion and their interpretation of the situation. But if there's no accountability to that relationship, it's tough to build a trustworthy relationship. So first thing is just that, look, if we're not doing the job that we said we were going to do for you, you can fire us, no questions asked. That also kind of goes hand in hand with our communication guarantee, because that's probably the biggest challenge that people have when working with real estate agents is they have to chase those agents down to figure out what's going on with the sale of their house, right? There's just hardly any communication, or they market their homes the same way they communicate with you, reactively, right? There's not a lot of proactive communication there. So, you know, ours says that, look, we'll be in touch with you once per week, at least, from the time we list your home to the time it sells. And if we don't, you can fire us. But that's expectation-based guarantees. What we're doing to help people financially are things like different commission percentage options when you sell your house, right? We've got different programs, all for kind of different reasons. And we can go down to 1% on some of our deals. So there's a wide variety there, and not everybody needs the same level of treatment and marketing because different people have different reasons for selling their home. Some people might not care how long it takes, so long as they get in a certain price. Others might be in a position where, hey, look, I don't need all the fancy stuff. I need to sell my house now. and I'm going to let the price do the talking for the house. So I'm really more budget conscious, and I'm just going to, rather than pay more commission for more marketing, I'll pay less commission for a little less marketing, but lower the price of my home to incentivize the buyer. But we've got different options for commission, and that's something that I think is important as you determine really what the goal is and the strategy associated with selling your property. I'll also say that because we do so much investment-based real estate, right? I'm an investor. I'm constantly flipping something. We work with other flippers. We've done, at this point, hundreds of millions of dollars worth of investment-based real estate deals. So if you want to be an investor, or if you're someone that owns a home that is thinking to themselves, man, this would actually be like a really nice investment. If I could just buy my house in this condition and then fix it up, I could sell it for way more than I would buy it for in as-is value. Well, guess what? You can be a flipper for your own home, even if you don't have all the money that you need to do that, because we have different programs for you that will allow you to borrow the money and then pay it back at closing. So we can take you through the process of what that looks like to make sure that there's, of course, a real return on investment, right? We'd be looking at your property the same way I'd be looking at acquiring and flipping a property, because it's all about the profit, baby, right? So we can help you with that. We've also got, if you're going to sell your home and buy another with us, we'll move you for free. That and plenty of other incentives. But I think the point here is, as this market continues to shift and kind of ebb and flow a little bit, the one thing that you can count on from us is quality representation based on a significant amount of experience. And we have the tools and the resources and the know-how to operate in this kind of market, because we've been here before and we were successful then, just like we will be now. So if we can help you with that, or if you want to get a copy of our guide, the most comprehensive home seller guide in Charleston, then just text the word guide to 843-800-0065. That's 843-800-0065. Or check us out online, listingsincharleston.com. That's listingsincharleston.com. But I appreciate you guys listening to this program. Again, if we can help you in any way, maybe you'd like to have your property managed by us and you want a free rental analysis, reach out to us, 843-800-0065, and we will provide you with a portfolio review, amongst other things, at no cost, no charge. So 843-800-0065 or listingsincharleston.com. Thanks again for listening to the Brian Beatty Real Estate Show, and you guys enjoy your weekend.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-800-0065. That's 843-800-0065.